I have Three Arrows Capital news. After 5 weeks in hiding, Three Arrows Capital founders Suju and Kyle Davis have finally spoken out. In an extensive interview with Bloomberg, the duo talked about how and why the big crypto hedge fund imploded earlier this year. A quick quote from the article: at times contrite and at times defensive, Davies and Shu, speaking from an undisclosed location, described a systemic failure of risk management in which easy flowing credit worsened the impact of wrong way bets. So the former Credit Suisse traders pointed to trades involving Grayscale Bitcoin Trust and Terra's Luna and UST tokens as contributing majorly to the blowup. They also called the collapse regrettable and said they believed in everything they set out to do to the fullest. They also said that they had to go into hiding because of death threats from what they called some crazy people in crypto, and the plan is to end up in Dubai and continue the 3AC liquidation process. There's quite a bit more in here, but first of all, nice to hear from them. I'm sure a lot of people, no doubt, were waiting very impatiently. Kind of sounds like they're trying to throw the blame around here a little bit, but for me, the standout was this statement from Zhu that sort of canceled out everything they said about, it being the fault of so many other things. Zhu said that if we were more on our game, we would have seen that the credit market itself can be a cycle, and that, we may not be able to access additional credit at the time that we need it, if it hits the fan. This is like what we heard from the Fed Reserve Chair Jerome Powell recently when he said, now we know better how little we understand inflation. I'm so glad that this was like a learning experience for you guys, but so much money was involved and so many people you will never know in person suffered. It is literally your job to know how these things work. How do you start a fund if you don't know how credit works? Anyway, I'm going to pass it to Jen before I spontaneously combust. Jen, please.
Yeah, I mean, I'm just going to echo everything that you said. Like, it is nice to hear from them, but is this what we wanted to hear? Basically, they're saying, this was an experiment, and they're really blaming what happened with Terra Luna and Grayscale. Like, they're shifting all of the blame and completely ignoring this 1,000-page report that everyone has been going through with a fine-tooth comb that point directly to some huge missteps on their part. And so to just not acknowledge some of the things that have come out in that report and some of the narratives that have been being spoken about in the media and from a regulatory front just seems so tone deaf. I would have rather just not heard from them if this was how they're going to handle it. George?
Yeah, I have like three things I'm thinking about at once. First, no matter how much money you lost, people, you don't deserve death threats. Like, yeah, sure, these guys were dumb. They did some dumb stuff, but they don't deserve these death threats. However, how can you not shoulder some blame? Sandali, like you said, we've known what credit cycles have been like since forever, since credit has existed, which has been a while, right? We've known credit existed since 1800, so you should know this, right? The other thing I'm thinking about is, this type of stuff happens, but I want to point out that very few people were willing to say out loud that the Luna mechanism was unsustainable. And there are even fewer who were discerning with that critique. And what I mean by that is, if you're just yelling about all the altcoins, your warning has less urgency. However, what I'm really am most shocked about is people getting caught up in this GBTC premium trade that Three Arrows got caught up in. If there's a trade that is so painfully obvious and easy to understand that it can be explained in a singular tweet, it probably isn't a serious trade, and it sounds unsustainable. So they got caught up in two unsustainable trades. Not sure I feel bad for 3AC though, right? They'll be fine. They're competent enough to have had more than $1 billion under assets under management, and they surely have at least $1 million of Monero or Zcash tucked away. So that's more than anyone has. Many people have in the world, so they'll be okay. I don't feel bad for them. They don't deserve death threats, but you should know your credit cycles. Adam, anything to add?
Yeah. So I think the comment that they made about not understanding sort of the way that this stuff works, and I think your comment about us understanding the credit cycles, how they've worked for hundreds of years at this point, I think that there is a counter explanation to this, which is that although that's true, credit has worked differently for the last dozen, a little bit longer than that number of years. And that's largely because the Federal Reserve first, well, actually the Bank of Japan first, but the Federal Reserve most recently and most significantly really broke the credit cycle. And so you didn't have normal behavior. And I mean, one question that I don't know the answer to, but which I'm very curious about, is how old are the founders of Three Arrows Capital? Because it's very possible that they've lived the majority of their trading lives, perhaps the vast majority or entirety of their trading lives, in this type of environment. And so really what that means is that although they do definitely bear significant responsibility, the Fed also has some culpability in this too, because it has, through its actions and manipulations of credit markets, has effectively trained people to believe the wrong things about how money should work. They did it for reasons that they thought were really good. They did it in ways that they thought were the least worst ways that they could. But you look at the blowups that we see from firms like Archegos, in the kind of traditional capital world, and, from Three Arrows Capital, certainly in the crypto capital world. And these are all symptoms of the problem that is monetary manipulation coming from the Federal Reserve. Yeah, George, back to you.
That's church, Adam. I love it. I totally agree. I'm not that old. I'm almost 28 years old, and my entire career has been a bull market.
Little dig to Adam there?
No, that was awesome. I agree wholeheartedly. I'm just saying I'm not that old, and my entire career has been a bull market. So I don't know what normal credit markets actually act like. Just because I read books doesn't mean I know anything. Anyway, Sandali, your hand went up, so I want to hear what you have to say.
No, yeah, they're 35, and they also say in the article that, there was a lot of accommodative borrowing. People were really happy when things were going up, so they let, more be borrowed. These are like things that any company, with good sense should approach with caution. And I think that's what we've seen across the board with crypto companies during this crash, that they were not maybe prepared or ready to kind of confront the possibility that the market will go in a way that they did not expect. And they say that exactly in this article, that they were like, we were not kind of expecting the market downturn the way it happened. Oops, contingencies need to be in place. And I think going forward, maybe we have a lot of lessons to take away from this. And, it's great to hear from them.